I'm Zhibin Zhou. My student number is 3428778. I'm going to introduce the background of Sino Forest Corporation. Sino Forest Corporation is one of the leading commercial forest plantation operators in the Republic of China. It was first formed in 1994 and its principal business are claimed to include the ownership and management of tree plantation and complementary manufacturing of downstream engineered wood products. The company claims to derive most of its revenue from sales of wood timber needed to produce industrial, commercial, and residential wood products in China. Sino Forest common shares has traded on the Toronto Stock Exchange under the symbol TRE since 1995 and its corporate office is in Canada. In 2009, Sino Forest Corporation was found to have committed fraud at an international level by overstaying its assets and revenue by millions.
Hi, my name is Nguyen, and my student number is S3487202, and I'm going to be talking about corporate governance relating to the company. Corporate governance broadly refers to the mechanisms, process, and relations by which organizations are controlled and directed. It is a major issue in the risk assessment phase of an audit. Within the Sino Forest Corporation case, they did not implement or establish effective corporate governance within the organization. The Sino Forest Corporation should have implemented a strict fiscal control of activities, which includes physical security of assets and including adequate safeguards over access to assets and records. One of the main uses of this internal control is to make sure physical assets are prevented from theft and to make sure that the success of the business and reliability of financial report preparation, and therefore the audit. If Sino Forest Corporation had implemented the physical internal control, it would have resulted in the fraud being discovered that the organization had been inflating its assets because it claimed to have $3 billion in assets, but reports showed it was less than that and it was only close to $1 billion. There are other allegations that the organization inflated their earnings. This could have been avoided if they had implemented segregation of duties, which means tasks should be separated between different individuals to ensure that a person or a group of people do not have total control over the entire process. The directors of Sino Forest Corporation did not delegate separation of duties towards their employees as they were able to control a lot of the workload, hence leading to the financial manipulation of accounts.
My name is Chen Vung. My student number is S3489484. I'll be talking about the audit failure. There was an audit failure which took place within Ernst & Young, who were the assigned auditors for the Sino Forest Corporation. Ernst & Young were the auditors who were contacted to audit for the corporation for the financial periods between 2007 to 2010. Due to the negligence of the Ernst & Young audit team, it did not comply with the legislative requirements in addition to both accounting and audit standards. Ernst & Young were required to pay 8 million Canadian dollars to settle allegations by Canada's biggest securities regulators and pay $117 million to settle shareholder allegations that it misled investors of the Sino Forest Corporation. The audit team did not undertake extensive assets tests and bank reconciliation, which resulted in assets being inflated and transactions being inflated or purposely manipulated by the directors. Sample evidence that was collected by the audit team was not verified, meaning any underlying issues were overlooked by the auditors. Much false information was ignored, removing the assurance engagement undertaken by the auditors of Ernst & Young to provide credibility to the Canadian financial market. There were questions over whether the auditors maintained independence, which is defined as the ability to act and be seen to act with integrity, objectivity, and professional skepticism. There was evidence which suggested that the auditors' pay was more than the industry average, which could have led Ernst & Young to have known about the fraud, however, ignored it. Hence, it can be said that the auditors were not acting with any independence.
Hey guys, my name is Yathindra. My student number is S3486010. I'm going to be talking about the overview. So basically, Sino Forest Corporation was first hit with the allegations in 2011 by the Muddy Waters Research Company, which found that the Sino Forest Corporation was inflating its assets and revenues by substantial figures. This resulted in the organization shares falling by 82%. The Sino Forest Corporation stood firm and denied that any involvement in any allegations of fraud. In 2011, the Sino Forest Corporation acquired PwC to investigate an independent investigation. However, the investigation was stalled due to the inability of PwC to gather information from the Chinese firm. So, August 26, 2011, the Securities Commission suspended the shares of Sino Forest, saying that the company had engaged in practices it knew or should have known preparatory fraud. The Sino Forest Corporation was a major downfall as it didn't implement effective corporation governance.